The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome there to the Diagnostic Trading Hour here. I'm your host, Darrell Martin, and if you have any questions at all, don't hesitate to give me a call. You can reach me right here at 1-877-927-6648. Again, that's 1-877-927-6648. And to do a quick market wrap for you, market's sort of quiet across the board, and looking at a few things here. We got the S&P up 5 points. We got the Russell up 3. We got NASDAQ up 16 and the Dow up 34. Over on natural gas, it's up about 0.5% today, so it's down 0.5% today, down 0.018. And we got gold up $5, silver up 0.066. And looking at oil, we got oil up 43 cents right now on yesterday's close, and quite a bit of movement in oil. And with just a whole lot going on there, we'll talk about some of that. And looking over at corn and soybeans, on corn, we got corn down $2, so not really a big move on corn. And on soybeans, it's up $3, also pretty quiet. Natural gas overall, flying down, had a huge drop, 4% move down from yesterday's close. It had a major run up, and now it is just giving it back. And we'll talk a little bit more about that. That's going to make tomorrow's natural gas inventory report all that much more volatile. And looking over at the currency pairs, we got the euro dollar down 17, the Aussie dollar down 46, a pound dollar down 49. So dollar gaining some strength right now against the major pairs there. U.S. franc dollar looks like it's up 20 pips. And looking at the U.S. Canadian, it's up 17, and U.S. yen up 39. So despite the market being up, we also got the dollar up. What is going on? So let's go ahead and check it out, look at a few things. What happened just here in the last 24 hours as far as the fundamentals go? Here on the Diagnostic Trading Hour, we look at things like fundamentals, technicals, seasonals, and statistical deviations. So looking at last night's report after the close there, had a few things going on. Had a trade balance report for the Aussie dollar. And really very bad outcome on that report. It was negative $2 billion. They thought it'd be negative 0.69. And you can just sort of see in the overnight trading that report came out. And it basically just had a huge drop. And it's basically just kept that negative territory all night long right there on the Aussie dollar. The trade balance report came out at 9:30 Eastern time. And what that is basically that's the export demand and the currency demand. And that's directly linked to, how much foreigners buy the domestic currency. Well, remember, Australia just lowered the interest rate on the Aussie like the night before. So that's not helping it. This was already happening. Obviously this is previous information. And they release it every month. And that came out. So that just shows not only they weakened the demand for the Aussie, but they show that the demand is weakening in and of itself. And so not good news for Australia. And really, that's just a massive blowout to their trade deficit. And just not good news for them, like I said, overall. So that came out last night. That was really the big, evening report to come out. And this morning, we had, like I said, a German bank holiday. I was telling everybody about that. Make sure to be aware of that. That usually is going to lower the volume a little bit. So anytime you have any of the major countries having bank holidays, so Germany being one of the major countries, of course, and they're on a bank holiday all day. So it doesn't mean they can't be trading, of course, but the banks are chilling out and they're taking a little bit of a break. And then looking over at a few other things, we had the pound, the services PMI came in lower than expected over in Britain. And anything above 50, that's really what you're looking for. But again, it came in lower than expected. And that information, it actually goes out to Reuters subscribers a couple minutes before the public gets the information. So just be aware of that one. So that's one of those reports that comes out on the hindsight, or they get to see it before everybody else gets to see it. They pay for that privilege, you could say. And so it comes out officially at 4:30. They had it earlier. And the market sort of rallied up into the announcement, and then you can see how the pound has dropped after the announcement. And what it is, they surveyed a bunch of purchasing managers, and they asked them questions about employment, production, new orders, prices, deliveries, inventories, things like that. And it's a big leading indicator on economic health because it's how the purchasing managers view the economy and how they're making their decisions based on that. And basically they had a less than favorable outlook. Not only was it lower than expected, but it was lower than the previous reported number in September. So negative outlook for the pound there. And then looking over this morning, we had the ADP non-farm employment change came out. And so how did that affect us here in the United States? Well, that came out at 8:15 Eastern Time, 7:15 Central Time. And market sort of liked it, I guess you could say. It moved up a few points on the report. Gave all that back on the close, or I mean, on the open of the market, I guess. Filled in the gap, dropped down basically a deviation level, and then decided to go ahead, hey, that maybe that was positive, and pulled on back up with some pretty strong volume there. So, not necessarily strong overall, but just strong as far as that report is concerned. And we did have a strong move down and a lot of profit taking, a lot of price consensus at this level right here. And we can see right there down at 1435, a lot of price consensus on that level. And then a big surge up, a lot of price consensus right at 1446. So that's one of those big reports they're looking at as, how will that, affect the unemployment number that's going to be coming out on Friday. So unemployment being the big theme of the week, really being the big theme, period. But just obviously highlighted this week because of the government news announcements that are coming out. And the number came in at 162,000. That's better than the 145,000 that they forecasted, so that's positive. At the same time, it's still lower than the last three reported numbers on the non-farm employment change. And the non-farm employment change is pretty simple. It basically is ADP, American Data Processing, automatic data processing. And what they do is they go in and they create a job creation report, and it's considered a big leading indicator. And they basically gather it from all their customers that they're doing, payment processing for. And it came in at 201,000 in September. It came in at 163,000 in August. Came in at 176,000 in July. And now it's trending down, so 162,000. And they also revised down some previous numbers as well. That was sort of another negative impact on it. And probably a reason we saw that impact on the open of the cash market there. They revised the previous number. It was 201, and they revised it down to 189,000. So they moved that number down, and then they actually moved the number before that was 173. They moved it down to 163. And, I mean, they've literally just moved, like, all of the numbers just down, down, down. And they keep sort of having that trend where they're, basically lowering the numbers and the outlooks and revising the previous numbers they're reporting. And so even the number reported seems to not be as good as they're saying it is. And who knows what we'll see this number actually come out as when they do finally report it. Like I said last time, you're looking at a number that was moved down about 11,000. It seems to be about 11,000 off on a consistent basis. And so if you take 11,000 off of 162, you get 151. So it may just barely beat the expectations on that. But nevertheless, it did come in. It was higher than initially expected, but again, just lower than the previous numbers that came out. Now, also here at 10 o'clock a.m. Eastern, 9 o'clock Central, right here, we had this report. This was the ISM non-manufacturing PMI. That number, when it came out right there, that actually helped do the reversal in the market. And what we saw on that ISM number, it came in at 55.1. That is one of the highest readings we have seen since April. In April, we saw it at 56. In March, we saw it at 57. March was the last time it beat expectations at that level of 55 or higher. And so that's actually a pretty good number right there. And they surveyed a bunch of purchasing managers, asking very similar numbers to what we're talking about in the pound, and showing that basically they have a increasing optimistic viewpoint regarding employment, production, new orders. And that number has steadily risen over the last several months. It was 55.1 this month. It was 53.7 last month, 52.6 before that, 52.1. So that's sort of nice, seeing that in a little bit of an uptrend on the ISM non-manufacturing PMI and the outlook. And so that gave a lot of, hope and optimism to the market, because as soon as that came out, the market went ahead and rallied on it. Now, what else did we have? We had the crude oil inventory report came out. Now, it did come out, worse than they thought it would be. They thought they'd have 1.6 million in inventory, but the change being 1.6 million of an increase, and it was actually a negative 0.5 million in the increase. And so if we go over and look at this on the charts and see the number, well, usually you would think that, hey, if the inventory number is lower than expected, oil would rise. Like that's just sort of the, that's the way it's supposed to work, right? Less supply equals higher price. But the price dropped and continued to stay down. Why? Well, at that same time, when they released that, they released some other information, and it showed that, and this has been going on overnight too, so they released this information where they found that oil has, fallen like crazy, basically because there is a lot of productivity. The production of oil coming out of the ground right now is at a 15-year high. And so like gasoline supply stockpiles has increased a lot. Even though the crude oil and distillate did decline, there is a lot of supply. And with that increased supply came a decreased price. So even though, again, it's not the exact same, but I mean, you just look at that and see that obviously there's a supply-demand thing going on there. And we have watched the oil, drop basically $4,000 a contract right there overnight, and closing there around 82 something and going down to about 88. So 92 to 88. So 89, 88.5. Yeah. So we got about 3.5, 4 points there, and just a big decline, and people on the exact high and low that you're looking at. But we were at 93. We went down to 89.5. So literally just at this high at 93 most recently that we've had this week, then, oil's moving like crazy. And if you go back and check previous days, you can see these $3 and $4 moves happening sometimes in minutes, sometimes over a couple of days. And we saw, go from 91 to 90 to 89 to 88. So we've just seen some big moves. And be careful when you're trading oil. Oil is a great contract to trade. It's a lot of fun, has a lot of volatility built into it, a lot of value built into the contract, a great use of leverage. At the same time, leverage can cut both ways unless you're trading oil using Nadex. Nadex, the leverage does not cut equally both ways because your risk is capped. And if you don't have an account already, hop on to TFNN.com and learn how this works. If you haven't done it already and you're trading oil, or you've been wanting to trade oil and get in on it, this is where you do it. Hop over to TFNN.com, click on Nadex, and click on Create an Account. Once you do that, you can open a live account in as little as 5 minutes from clicking the Start button to having an account funded. And go ahead and fill that information in, get your account going. You can also get a demo account, and just click on the demo account right here, and they'll basically get you all set up on the demo account. So stay right there, folks. We'll be right back after the commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're talking about how to get an account set up. It only takes $100 to fund an account over at Nadex. Obviously, you're probably going to want to be putting more than that in there to do your trades, but you actually can do trades for $5, $10, $20. Now, if you want to get a demo account, just scroll down to the bottom, and under here in the footer section, you'll actually see a demo account link. Click on that demo account link, and then you can sign up. It literally takes about 15 seconds. Just put in demo dash and put in the username there, and then first name, last name, phone, and email address, and hit apply for demo. They'll send you an email, and within literally a few seconds, you'll get that email with the password, and then you'll be able to log in right away to your Nadex demo account. And once you log in, then you'll be able to see exactly how it works and all the trade opportunities that are available across the indexes, forex, and the commodities markets. And so that's a quick summary there on how to get set up on a Nadex account. And like I said, before we left there, I was talking about the oil contracts. And basically what's going on with oil is, even though the inventories came in sort of neutral, a bit I guess you could say bearish or bullish, because they were a little bit lighter than expected. It is expected that those oil inventories will pick up a lot for two reasons. One is that oil output has climbed to the highest level in 15 years. And it's actually the most it's been since December of 1996. And that puts us at about an output of around 11,000 barrels a day and 8.52 million barrels last week alone. So not only do we have increased supply, but demand has dropped. Okay, so demand fell 0.3% down to 18.3 million barrels, and that's one of the lower numbers that we've had lately, and that's the lowest level we've actually had since April. And so a sluggish economy is causing it to drop in demand. People aren't buying as much oil. They're not doing as many things like gasoline and everything else. And so the lowering demand and the increased output basically means that there will be a higher supply, obviously already showing lower demand, and the net result is oil dropping. And so whenever you're looking at ththese reports, you want to look at whatever facets go with the report, such as crude production and inventories combined, because and then also just consumption demand. So if demand is low and consumption is high, even if the inventory's dropped momentarily, it probably won't stay that way, and it'll probably we'll probably actually end up seeing here in the future weeks. We'll see the inventories actually rise quite a bit compared to previous weeks, and you'll see that as the expected numbers come out on crude oil. And just a lot of moves right there that you can take advantage of, just depending upon how you're looking at it, how you're trading it. And looking at oil, right now, it fell down to 89.64 is a low right now, and that is pretty low. So that's just past one deviation, which is $90.12 is one deviation move. So we're really right here, and that's where you can sort of see it stopped, and then bam, so it fell on down the rest of the way. And on down here to now it's making some new lows at the moment, 88.62, and the target right now for oil that I have is down at 88.35 for 2 full deviations. So we got about 30 more cents to the downside before we hit a second deviation level. So what does that mean? Well, one deviation level, that's where you're going to be looking to take profits, or at least tighten stops at the very least. So if we go up here and we're looking at this and all of a sudden it hits $90.12, then I'd be looking to tighten my stop, and be looking to move it down. If I thought, hey, it's going to continue to drop, then I could do so, but I'd be, again, wanting to look to tighten my stop when it gets pretty close to that second deviation level. And again, we're only, 30 cents away from that level. So at this point, definitely would be tighten stops, looking to take some more profits, and potentially looking for, is there a reversal, or do I think the decline is real? Well, the decline seems pretty real to me. It's moving down. We have stronger volume, and with a weakening pullback there, so we got a really strong volume on the move down. You can see that strong volume, then lighter volume, and had a bit of an uptick with that volume bar. Even that up move right there did not break the previous strong volume bar. Moved on down again, pushing through this level. Not as impressive until we get to here. And we can even back up, look at, say, 10-minute bars. And let's see, let me flip over to those. And we'll go into the 10 minutes, look at today's level. And we got that move down. Got to move down right here. And pretty impressive volume move down. Not as hard or as high, I guess, as this initial drop that we had. But still, when you combine these bars together, you can still see there's definitely a lot of strength in that move down. Even this bar right here with its move up, notice how it wasn't able to keep the strength there, and it really, basically closed as a doji right there. And I'm sure that Steve could give us the exact, that might be like a hammer reversal falling star, I think might be what that is. But if we go and pull up a candle on it. But anyways, stay right there. We'll be right back after this commercial break, and we're about 7 cents from that second deviation level.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And it looks like we are really hitting and hammering hard against that deviation level. You'll notice we called it at 88.35. It's sitting right at that level right now. It's just been bouncing up and down on it like crazy. We're not getting a whole lot of volume pushing through this time. Last time after this big move down, it went ahead and it hammered through that last deviation level that we had. We had a deviation level on crude oil at $90.12. That was right up here. And right there, and you can see it. I mean, it just slammed right through it with massive volume, a lot of conviction. Did a perfect pullback, pushed on through that one. Did not really break the volume highs there, but did go ahead and move on down to that second deviation. Sitting right here at 88.35, and that's where our deviation level's at right now. So now you got a choice. What are you going to do? Well, if you're short, you're going to be taking some profits, or at the very least, tightening some stops. Okay? And the next thing is, which direction are you going to go? Well, oil has already pushed itself 2 deviations, which is a pretty massive move. And so, you know, it's a little bit, challenging sometimes trying to figure out, what are you going to do next? And, where do you want to go? How do you want to play this? How can you take advantage of it? So when we're putting all that together, there's different ways that we can look at it. And we got to find, good risk-reward trade setups. So if we go over here and we check out Nadex, we scroll on down to commodities, bull spreads, and go to crude oil, we can start seeing which ones have either a ceiling or a floor close to it's $88.50. And so if we go to 12 right there, that's going to close here in just a matter of 20 minutes. So probably not the best trade for us. But if you did want to go long, we could check it out to see, what would the risk be on this trade. So $28 risk, and oil would have to be above $88.52 for us to be profitable on that trade. And we have until 2 o'clock or 1 o'clock here. So we basically have about 24 minutes on the trade. And so if you went on that trade, looking at a potential bounce off the deviation level, I'm going to go ahead and put that trade in. We're going to look at it and just sort of check the set out up. And looks like we could have a decent little bounce right here off this deviation now that we've seen some weakness in the continued decline on oil. And so go ahead and put that in, get that trade in. So now we're long on crude oil. And that gives us a trade that basically just, like I said, goes to 2 o'clock. And there's a little bit longer we can go because it's basically matching the underlying market, okay? So underlying market, so it's going to be looking at the inventories, or not the inventory, the futures floor pit trade there. Going to 2:30 there Eastern time, and we can see, is there anything better that gives us another half hour on the trade there? 88.50, so not really. So we're going to be looking at about $50 risk on the ones that expire at 2:30. What about the dailies? Dailies, we got it down to 87. We have an 89.50, so that'd be good if we were up there, but we're not. And then looking at the master spread, that's your widest spread, is known as who says daily. It has the biggest number. It's your master spread. And that was going to trade usually right on par, very close to the underlying market. And with that trade right there, really not seeing anything that's going to help us out. So without having a huge risk reward, as you can see, if we open that thing up, you got $150 risk. Doesn't sound like a lot. Do 10 contracts, so to make it equal an oil future. Why does 10 equal an oil? Well, because every tick equals $1. So just like on oil, every tick equals $10. So if you wanted to make it equal in oil, then you have to do 10 contracts. And so we got that on. So that's sort of our spread setup. What do we got over here on the other side on our binary setup? And again, we went long on the 88, 25, 89, 75 bull spread. What do we got on the binaries? Is there anything that looks sharp? Looks like it'd be a good trade. And what you can do is at the bottom here is click refresh. Make sure you're seeing the most current trades that are available. Hop on over to commodities and then go to binaries and then go down to oil. And so we can look into see literally out of all the oil contracts what's available. Well, it has a 89.02. If it gets above that, there's a $4 risk on it. What about there's a $4 risk on $90.02. There's a $10 risk on the 89.02 trade. So if it moved up about 50 cents from here, again by 2 o'clock. So we got a very short period of time, but 50 cents is not exactly a massive move today for a matter of 20 or 30 minutes. So that is a trade possibility. I really do like the weeklies as well. And if you do go in on this, if you go in and you're looking at this trade right here and you're considering it, then just think about a couple things with it. Go in and go, you know what? I like the trade. I'm going to take the trade. I'm going to do, we'll just say, 5 contracts, whatever you want to do on it. But if you're going to do that, you need to put a take profit in. So if it bounces up off of it, okay? So if we go in and we say, okay, I want to do, say 10 contracts and put that trade in of a $65 risk, don't get greedy. What would be great? If I could make double my money on that trade, I'd be pretty happy, right? So let's go in and let's, if we got in at 650, now let's put in an order to get out, okay? Let's say a little higher price there. We'll say instead of 650, then we'll do a very simple formula here, okay? And just do your risk. I'm going to do times 3, so it includes your risk and adds in, 2-to-1 risk reward. If I can get out at 1950 on the trade, I doubled my money, okay? So even just a slight pop in oil could make that a profitable trade. And so I put that trade on. Now I have a take profit order sitting there waiting to get filled. If we just get, say 20, 30 cent move up in oil, boom, I'm in, I'm filled, I'm done. And that was a good profitable trade for us. So now, on the other side here, we can go over and we can look at, what about the daily contracts? Well, on the dailies, you're going to have more variety that you can take advantage of. And but you have to move a little bit further at the moment. We do have an 89 at $19. Okay, so if it moved up 60 cents, that'd be worth 50, or it'd be worth $100 at expiration. We could also look at the downside. What if it continued to decline? Well, what's the furthest we think oil would decline today? If it was going to continue to move down, the furthest down move I'd look at is 87.25. And so we're getting closer to that, but we still do have a solid, little $1.20 something move. and we only have about 50 minutes left for that to happen. So let's say you want to put on just sort of a hedge trade, just in case oil just drops right here, okay? And to hedge out, all your other risk, we put on, let's say, we'll put on 4 trades. It's a $32 risk, a $368 profit if oil does just drop. And I like combining these together. There's a lot of ways to put them together. But again, I'm doing 4 contracts, going short on this right here, and $30, risk on the trade. And again, this is a hedge trade for me, okay? So if by 2:30 or 1:30 Eastern time, or 1:30 Central time, 2:30 Eastern time, oil does decide to go ahead and drop another point, then I've hedged off the majority, if not all of my risk, and actually made some money in the process. So I've essentially strangled, okay? I've done a strangle on oil. If it rises up, I can make money. If it drops, I can make money. If it stays flat, then I could obviously lose money. So I really am looking for a move up or a move down on oil. And no matter what, I'm hedged. I'm not worried about, my risk is capped. I'm not worried about a big spike one direction or the other. I can't get, stopped out of the trade. Actually, a spike one direction or the other would be great. I'd love it. I'd have absolutely no issue with it whatsoever. And I actually could win on the upside and the downside. So it could go up. It could hit my take profit. It could go down. It could hit my take profit, be profitable. Just depending upon, where everything lands. So there could definitely be a lot of profit in that trade. And that's just a very simple way to go in and trade oil when you're looking at those deviation levels, when you're looking at those, 1 deviation, 2 deviation levels, and playing from 1 deviation to the next. So you could, if it hits, say, a 1 deviation, you could play it down to the second one, and that would have been a trade that you could take an advantage of today that would have worked very well for you. You could also have a strangle on where you're playing down to the second and back up to the original close price, sort of like a gap fill. And we had some trades like that this morning on the indexes that you could have taken advantage of. So that's just a quick summary on how to trade the spreads and how to trade the binaries and sort of how to put them all together. And to look at, what does this mean as far as our trades go? Well, right now I bought in at this trade right here, went long oil 88.56. So if it moves up about 9 more ticks, I break even. And anywhere between 88.25 and 88.56 will be, I'll get some of that money back. And if it moves higher, then I'm profitable. Also, if it moves up that far, I'm definitely going to be profitable on my long binaries. And if it does happen just to drop on us, then I can be profitable on this short side. So you can combine the binaries, you can combine the spreads, you can put them together. And you just want to have some profit targets and you want to have some reasons for where you're doing things. You're not just randomly doing it in the middle of nowhere. And that makes, it just makes it a lot less stress-free. I know what my risk is up front. I'm not worried, again, with oil and how it can go. And on our indexes, they're flying like crazy right now. I'm looking over at my tick feeds and seeing just red lights across the board. And, yeah, you can see that right there. So you got the Russell just falling on down. It's like we got the ES is joining in on the party and the Dow. So sort of, pick whichever one you want, but they are all moving. And got the Dow right there. Got ES right there. So let's go ahead and take a quick look at the deviation levels on these so we can know what kind of trade setups could you possibly be taking advantage of. Well, on the E-mini, let's see here on the S&P, let's go ahead and I'll maximize this chart so you can look at it. And looking at here today, we basically had a move, there we go, on up. We had a close yesterday at around 1441, and we moved all the way up to 1440, basically 1448.75 it looks like. And let's see, high, 1448.75. So well, 1448.0, it was basically our half deviation, gave up off that. On the downside, what do we have? We had to move down to a low of 1435, and that was basically just past our half deviation. So actually our half deviation is a little bit lower than that. So basically it's just bouncing between half deviation marks. When it's doing that, then you're looking for a bounce back, a move back up, goes another half, comes back down another half. And so we can see that other half would basically be right back down to where it just came to, 1441. And so probably a move down to about right here. Should be at least an expected move on it. And then just I'm not expecting it to break out of these half deviation levels here in the next couple hours. So you could definitely just be playing any of the bounces here. And you could do a straddle right around 1441 for back up and down. Or you could just play a few points down if you're going in for a quick scalp trade on ES. Looking over at the Russell. So the Russell for the overnight for today, let's see here, went on down to 831. And over on the Russell, we have 831.8. And we went down to 831. So it actually moved all the way down a deviation level there. And then it bounced on back up. So it's quite a bit more volatile. On back up to, we had a high there of 840, basically 842. And that is almost a deviation level, 843. Basically would have been a deviation. So within a point of that. So it's moving about a deviation up and down. And it's more than filled in its gap already. It's still continuing to show weakness. And looking at the volume on that, has some pretty strong conviction. And it's probably going to do a little bit of a pullback right now, and then it may just keep on pushing on down. If it does, then I'd expect the lowest move to go on back down to the 830, probably at the lowest 831. And next target would be 834, and then target after that 833. So just a few points away each time, but several different targets that you could lay up on the Russell. And then checking out over on the Dow. On the Dow, what do we got going on? How volatile has it been compared to the other indices here in the U.S.? And it's moved on down here to 13,360. We got the Dow on down to 13,350. So 350 would have been a deviation move. So it moved about a half deviation down. And 13,464 on the high side. We had a 13,472 on a deviation, so about a half deviation. So it stayed just inside a half deviation, not near as volatile. So if you're really wanting the mover and shaker today, you're looking at the Russell. And but again, right now they all just retraced basically pretty much to yesterday's close and doing a pullback right now. And they may continue to show weakness, or they may flatten out, or may take off. So there's so many different ways you can take advantage of it. But one of the easiest ways is on those deviations, just playing the reversals on each side. And then, of course, we can wrap up over here looking at our oil trade. Oil is, let's see, pushing on down. Let's see if it keeps pushing down or keeps pushing up. And let me pull back up one of our trades here. Okay. And just wanted to sort of see right there. Now we moved down to 88.28. And we're just going to see. Right now it's sort of flat, trying to decide what it's going to do. But notice how we're getting that volume pullback while it's pulling back. So it definitely could be setting up for a potential another drop. And if it does, we have the spreads in place to, or not the spreads, we have the binaries in place to take advantage of that in case we just get one more kick in the market there where it decides to go ahead and drop a little bit further. And with that, let's go ahead and check out our other fundamentals. So we went through a few of the deviations today. Let's check out a couple of our fundamentals on what we got coming up. We got Aussie dollar. Going to have more stuff coming out tonight at 9:30. They're going to have their retail sales and their building approvals. And with their contracting economy, we could only expect that continues to be a challenge for them. And so we'll see this, how that plays out. But Aussie dollar definitely something that you can go in there and take advantage of. And looking over here at, let's see, what do we got for tomorrow? For tomorrow's setup, looks like we got France is going to be having a 10-year bond auction. That should be interesting. So they're sort of entering the news as becoming one of the next Spain, I guess you could say. And with their new 75% tax rate on millionaires, I wonder if people are going to be maybe moving outside of France. So just a thought. And in Spain, they're already seeing a mass exodus with their tax rates. They're trying to avoid talking about higher tax rates because so many businesses have moved out. And despite having higher tax rates, they are bringing in less money. Well, that's because the millionaires are leaving. So don't raise taxes, or people go where they don't have to pay as much. But anyway, so that's France is probably going to be learning that lesson really soon. Spain is learning that lesson right now. And we'll talk about a few of the other reports coming up here before we close out the show. Stay right there. We'll be right back after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so let's go ahead and wrap up on the fundamentals of what we got coming up tomorrow. And what we got here, as I said, we got the French 10-year bond auction coming out. And then we have, Britain has quite a few announcements coming out. They're going to be having their announcement about their bank rate. They could lower it. They've been at 0.5. I doubt they will, but they could. And if they did, of course, that would further weaken the pound. And then looking over at the asset purchase facility, that number is also coming out. Both of those numbers coming out at 7 a.m. Eastern Time, 6 a.m. Central. So if you're a pound-dollar trader, then definitely that would be the time to make sure you're on board and ready to go. And trade it with a limited risk. Don't worry about being whipsawed on the news. And check out Nadex, and great learning opportunity. So grab yourself a demo account if you don't have one, and work on getting a live account so you can see exactly how things are working on the live side as well. And then looking over here, we see basically it's where the members are going to vote on the amount of money that's needed to create the program. And what I'm talking about right now is the asset purchase facility. So again, that's the MPC members vote on the total amount of money to create their program. The individual votes are published 2 weeks later in the MPC meeting at minutes. So those will be coming out. They'll be making their official bank statement, basically what's their interest rate going to be, their short-term interest rates. So we call our Fed funds rate. And then they'll have the MPC rate statement where they'll come out and they'll, basically, what was behind that, what did they say, why did they say it. And then we cut on over here to the U.S., going to have the minimum, actually the euro is going to have its rate also. So it has its minimum bid rate tomorrow, and they're at 0.75, so they do have room to cut that on down. And then looking on over a little bit further, we see that we have the unemployment claims right here in the U.S. happening at the exact same time as the ECB press conference at 8:30 a.m. Eastern time tomorrow. So definitely be keeping your eye out on that one. And that's going to be causing some, I'm sure, some market movement, not only with the unemployment claims, but also with the ECB and what comes out of that press conference, what's said. We'll roll on over in Canada. We're going to have the IV PMI. And basically, it's a survey of a bunch of purchasing managers, like a lot of the other PMIs out there. And China had its last night. It came out really bad, but we'll see how Canada's comes out. And they've been rising steadily. They've been beating expectations the last couple months. They may continue to do so. And that'd be a U.S.-Canadian trade for you right at 10 o'clock Eastern, 9 o'clock Central. And then we'll have our factory orders are going to come out at 10 o'clock here in the U.S., and then natural gas storage. Obviously, a big impact on natural gas. So natural gas has been moving like crazy. We've been talking about how it's had an insanely big down move. And you can just see just the big swings that have been going on in natural gas lately. And so there's huge moves right there. And looking over at natural gas, we can see that it moved down to, let's see, the low today is 3.348 there. And looking at natural gas, 3.348. is just shy of 2 deviations at 3.333, and so it definitely is starting to get a little bit tired after that massive down move, and it's done a pullback and just keep showing strong strength on those continued down moves. But so that's the natural gas right there. Again, that report is coming out tomorrow, and you want to keep your eye on that if you're trading natural gas. And natural gas can move fast, and it can be pretty furious. So you do want to make sure you have something like Nadex helping you, so you don't have to worry about getting killed in that trade. And then the big number coming out tomorrow, we're going to be having the FOMC meeting minutes, and that'll come out at 2 o'clock, and we're going to see why did they go ahead and launch QE. A lot of people thought they were going to be holding off on that. They did not hold off on that. And so why did they? And what were the reasons, what were the statements that were made behind that decision? And so, with that decision, people are going to be watching to see exactly how that turned out. And then we'll look over, and we're going to have Japan is going to have another policy statement and an overnight call rate. Again, Japan just keeps coming out and talking. And sometimes you think they'd be better off if they'd stop. But they'll be coming out, and we'll see how these trades wrap on up here in the next half hour here on oil. Hope y'all have a great day, and I will see you tomorrow, 12 to 1.